everything depends on the economy. And I think the outlook for the economy is pretty good. We've got a consumer sector in particular that's very robust. So I think it's a good time to deploy capital in US real estate. The problem, I think, in the real estate sector, or what's been called the problem, is the office sector. And a lot of people think that is about remote working and companies downsizing. It is partly about that. There has been a demand shock, but it's not the only thing. Over the last couple of years, we've probably seen up to 100 million square feet of new supply hit the market. So there has been new construction as well. And I think, maybe the tech sector, which would have overexpanded in that period up until the pandemic, probably took some time out to shrink back their portfolios. So I don't think it's only about remote working. Well, over the course of the last 24 months, even as companies have been downsizing their real estate, their holdings of office, actually the number of people employed in office-using jobs has gone up. And we're beginning to see leasing come back. In fact, we've seen 3 quarters of really strong leasing. And we're beginning to see vacancy rates trend down. And I would say finally, and this isn't to investors, I mean, there are many interesting investment theses around office. I mean, companies are going to the best stock. They're going to lively live, work, play neighborhoods. So that, if you're looking to invest, those are the sorts of neighborhoods that you want to go to. Investors, should really target offices in lively live, work, play neighborhoods. I would say for occupiers who are sitting on the sidelines, wondering if they need more space, but they're aware of the fact that they might need the best quality space, they've got to move quite quickly. Because that portion of the market which is really high grade is quite small, and companies are targeting that, and the vacancy on that is coming down quite rapidly. So now I've talked about offices, but I mean there are other sectors. The apartment sector, which we call multifamily. The US is short of houses. Mortgage rates are high, but the employment levels are high as well. People want to get out and get their own places. So all of that demand for, independent living, if you like, is going into the apartment sector. So we've had really high levels of absorption. That means what I'm talking about is really high levels of people are leasing new apartments. So I talked a bit earlier about, a lot of new construction hitting the market, particularly in the Sunbelt markets. Well, that's those vacancy rates are turning. People are absorbing that space. People are leasing that space. So those vacancy rates are coming down. So I would say that multifamily, if you're an investor, has good prospects. And then, industrial. What do I mean industrial? I mean those kind of sheds that that logistics companies use. They bring goods in from abroad and then distribute them straight to our home. So I think leasing's been quite good in that area. But again, there's another big wave of construction that will be absorbed over the course of 2025, and I think we expect reasonably good leasing. But there is a mild sense that companies may have overexpanded their logistics platforms in the COVID era. Remember when all of the people sat at home and bought lots of goods. So I think we're seeing companies, maybe rationalizing their portfolio and being more efficient with their logistics portfolio. And that means a mild increase in vacancy over the course of 2025, but still a lot of good opportunities, I think, in the industrial sector, particularly in the smaller size boxes, the light manufacturing facilities in built-up urban areas. Still relatively low vacancy rates there, and they represent a good opportunity. Finally, retail. I mean, I'll go back to where I started. The consumer is in fine fettle. And I think also retailers are in good fettle as well, because, during COVID, they got sort of scourged, and a lot of them went into administration, closed down the stores that didn't work, restructured their balance sheets, got their online, their omni-channel delivery models really slick. So I think retailers are doing a good job now, and we haven't built any retail space for 15 years. So of all of the sectors, the vacancy rates are lowest in the retail sector, and probably the fundamentals are the best. So there are some very interesting investment opportunities there. So, from a perspective of good economic growth, gently declining interest rates, and firming real estate fundamentals, I think there are great opportunities in US real estate now, good opportunities to buy and hold long-term assets for good returns.